Right now, the entire crypto market is closely watching Bitcoin, which is trading around $67,333. Over the past few weeks, Bitcoin has been moving inside a wide range between roughly $64,000 and $72,000, showing both strong buying pressure and repeated profit-taking by traders. This kind of sideways volatility usually appears when the market is preparing for the next major directional move. Bitcoin is not just another cryptocurrency. It is the asset that controls the rhythm of the entire crypto market. Whenever Bitcoin stabilizes, altcoins usually start moving. Whenever Bitcoin becomes volatile, the entire market follows. That's why every investor, from retail traders to large institutions, is watching Bitcoin's current price action very closely. At the moment, several important developments are influencing Bitcoin's market behavior. One of the biggest stories in the crypto industry continues to be institutional adoption. Over the last year, major financial companies have entered the Bitcoin ecosystem through regulated investment products such as spot Bitcoin ETFs. These financial products allow large investors, pension funds, and institutions to gain exposure to Bitcoin without directly buying and storing the cryptocurrency themselves. This institutional access has fundamentally changed the market structure. In previous cycles, Bitcoin was driven mainly by retail investors and crypto-native traders. Now billions of dollars from traditional finance are flowing into the asset. Institutional demand tends to create stronger support levels because long-term investors usually accumulate during corrections rather than panic sell. Another major development influencing Bitcoin right now is the long-term impact of the Bitcoin halving cycle. Halving events reduce the amount of new Bitcoin entering circulation by cutting mining rewards in half. Historically, these supply shocks have played a huge role in previous bull markets. When the supply of new coins decreases while demand continues increasing, prices often rise dramatically over the following months or years. This supply-demand imbalance is one of the reasons many analysts remain extremely bullish on Bitcoin's long-term outlook. Even though short-term price movements can be volatile, the overall trend over the past decade has been upward due to increasing adoption and limited supply. Another important factor affecting Bitcoin today is macroeconomic sentiment. Global investors are paying attention to inflation trends, interest rate decisions, and monetary policies from central banks. When inflation fears increase or when investors lose confidence in traditional financial systems, many people view Bitcoin as a digital store of value similar to gold. In recent months, Bitcoin has increasingly been discussed alongside traditional safe haven assets. Large institutions now sometimes treat Bitcoin as a hedge against currency debasement or economic instability. This shift in perception has helped strengthen Bitcoin's reputation as digital gold. At the same time, the cryptocurrency industry continues evolving technologically. Layer 2 scaling solutions, faster payment networks, and new decentralized financial infrastructure are expanding the utility of Bitcoin beyond simple value storage. Innovations like the Lightning Network aim to make Bitcoin transactions faster and cheaper, enabling real-world use cases such as micropayments and global remittances. All of these developments create a complex environment where Bitcoin's price reacts to multiple forces simultaneously: market sentiment, institutional flows, macroeconomic trends, and technological progress. Now looking specifically at the current price level around $67,333, many analysts believe Bitcoin is sitting near an important consolidation zone. In technical market cycles, consolidation phases usually happen after large rallies. During these phases, the market absorbs profit-taking while long-term investors continue accumulating. This type of sideways movement can last weeks or even months before the next breakout occurs. Historically, similar consolidation patterns have appeared before major bull market expansions. Another interesting signal analysts are watching is Bitcoin's on-chain data. On-chain metrics track how coins move across wallets and exchanges. Recently, several reports have shown increasing Bitcoin accumulation by long-term holders. When coins move off exchanges into private wallets, it often indicates that investors plan to hold them rather than sell. Reduced exchange supply can create upward pressure on price if demand continues rising. When fewer coins are available for trading, even small increases in buying activity can push prices higher. Whale activity is another important signal. Whales are investors or institutions holding large amounts of Bitcoin. Market analysts closely monitor whale wallets because large transactions can influence market sentiment. Recent blockchain data has suggested that large investors are gradually accumulating Bitcoin during dips rather than exiting positions. At the same time, retail investor sentiment is slowly improving again. After periods of fear and corrections, many traders are starting to return to the market as confidence grows. Historically, retail participation increases significantly once Bitcoin begins approaching previous all-time highs. Now let's discuss the big question everyone is asking: where could Bitcoin go next? Price predictions for Bitcoin vary widely depending on the assumptions analysts use. Some conservative models focus on gradual adoption growth and suggest Bitcoin could reach somewhere between $90,000 and $120,000 within the next major bull cycle. Other analysts use supply shock models based on the halving cycle and predict Bitcoin could potentially climb above $150,000 if institutional inflows accelerate significantly. More aggressive predictions come from analysts who believe global financial adoption of Bitcoin will expand dramatically over the next decade. In those scenarios, some forecasts even suggest prices exceeding $200,000 or more if Bitcoin continues capturing market share from traditional assets like gold. However, it's important to remember that crypto markets are extremely volatile. Even during strong bull cycles, Bitcoin often experiences multiple corrections of 20% to 30%. These corrections are a normal part of market behavior and often serve to reset leverage before the next upward movement begins. Another factor influencing future prices is government regulation. While regulatory clarity can encourage institutional adoption, strict regulations could also temporarily slow market growth. Governments around the world are still developing policies regarding cryptocurrency taxation, exchange compliance, and financial oversight. Despite these uncertainties, Bitcoin's long-term fundamentals remain strong. Its limited supply of 21 million coins, decentralized network security, and global recognition make it one of the most unique financial assets ever created. From a long-term perspective, Bitcoin's adoption curve continues expanding. More companies accept Bitcoin payments, more investment funds hold it as a treasury asset, and more countries are exploring blockchain technology. Even large corporations and technology companies have begun integrating Bitcoin infrastructure into their financial strategies. This gradual integration into mainstream finance represents a major shift compared to earlier years when Bitcoin was considered a fringe experiment. Looking ahead, the next major catalyst for Bitcoin could include additional institutional investment products, technological improvements, regulatory clarity, and continued global adoption.